So one of my subscribers asked if I ever plan to sell my set it and forget it stocks. The straight answer is no. And I'm going to talk about why and what I might do in that account in this video. So stick around, it should be really good. Hello, my name is Adam Kahn, and this is Investing with Adam K. I hope everybody's having a good Friday. I hope everybody has some fun plans for the weekend, maybe hanging out with family, maybe something pretty cool. Let me know in the comments if you have something scheduled that you're excited to do this weekend. And I hope everybody's crushing it in the market because honestly, it would have been a tough week not to have had good performance unless you're trading or doing things maybe that a little too active in the account. Feel free to make comments in the video or in the comment section. It's hard to make comments in the video, but make some comments in the comment section if you're having issues or difficulty trading, or you seem to be having some struggles. I'm happy to try to make some suggestions. I am a long time floor trader where I used to trade Japanese yen futures. I would dabble every now in some of the other pits, but primarily I would just stick to the one I was comfortable with, and you have your position and everything else. But I, a lot of it's more emotional than anything else, and making sure you stick with your strategies. And I'm happy to try to guide people through it. Now, as always, it's not financial advice. You need to do your own research. You shouldn't listen to me or anybody else on YouTube when making financial decisions because it's very personal as to how you need to invest your portfolio. But one of the subscribers asked me if I sell the stocks in my set it and forget it account when I think things are overvalued. And it was a great question. I totally understand it. And I don't. And the reason I don't is things get overvalued and undervalued and continue to chug along. And my goal in that account is to own things for decades because I know over decades, if I pick good companies, they grow over time and they compound, and the account really grows, even if I have some bad picks mixed in with it. It's kind of why they talk about diversification. I know some people may like the ETFs. I personally like picking individual stocks. Maybe it's an ego thing. Maybe it's simply to see if I can outperform. Whatever the reason is, it's also that I like to feel like I own a part of the companies I invest in, but I don't sell the set it and forget it account. What I might do, and I even try not to do this because I have a theory with this as well that I will explain, I might rotate some things out of some companies as it becomes uncomfortable with the size. For example, when Meta fell, I bought a very large position for me when it fell, which was uncomfortable to begin with. And I've held it pretty far. I've sold about 30%. I sold 20% when it hit around 500, and I sold another 10% somewhat recently. And sometimes I kind of kick myself for that because my theory is if I put in the right amount of money and just let it be, maybe I get lucky and Meta is the thing that just goes and goes and goes, that one day it becomes such a huge position that my generations of people are well taken care of because of the luck of one company that happened to perform. And maybe it's not Meta, maybe it's something else, but I do tend to be conservative enough that when the position becomes large enough that I start getting uncomfortable, I might rotate out of something. And I tend to rotate into a different sector that in my mind is safer and secure because the way I think of it is I'm kind of taking that money out of a risk position and putting it into something that potentially pays dividends and is a big, boring company. The other part of their question that they were asking is like, is it all large cap or small cap, or do I not pay attention? I sort of don't pay attention, but real asterisks there when I say sort of. I would say 95% of that portfolio is in large cap companies, most of which have predictable earnings and things like that. I don't take a ton of risk. I might throw 0.5% or a small amount into some crazy maybe I get lucky type of thing, even in the set it and forget it because I don't want to trade it. For example, I did buy Oklo in that account. It was a very small trade at the time. I bought it because the person who got nominated or pushed into director of energy was on the board of Oklo. I've never heard of the company, and even when I looked at it, it loses earnings. I have no affinity to it. Excuse me, I might clap because I want to. Yeah. Anyway, I don't know if that got your attention, but there's a mosquito going around. They should be gone this time of year. Anyway, if it flies around again and you see me clap, I just want to get it. But I have no faith in the company and no real affinity to it. I just felt like if a person gets into the position of power and they're director of energy and a company they were on the board of that might get some favorable things and may have some room to grow. I didn't expect it to do what it did. This is not like, to me, it feels like a meme stock more than anything else. Similarly to what I said about Meta, I sold some calls that in October, at this point, after today's move, I assume that they'll get exercised and kind of shave down the position a bit. But I didn't expect it. Like, my dream with Oklo was that it got to 70, maybe even $80 a share by the time the administration was done. Seeing it to shoot to 120 as of when I looked earlier today just boggles my mind. So there's no reason to lighten up. At this point, I feel like I don't have any money invested anymore because what I put in originally I've taken out. But I put in such a small percentage of the portfolio that if Oklo went to zero, it didn't matter so much. Like, I never like to see that happen, but I would have just thought, well, bad trade and moved on. But for the most part, it's very large cap. I've gone through the portfolio and videos before. I'm happy to do it again, but it's tech heavy with Amazon, Meta, and Google, I think, being my three largest positions. But then it's things like Chevron and Starbucks and Disney, which I'm having mixed feelings about with what went on with Jimmy Kimmel. I hate to admit because, you know, look, I watch the monologue out of curiosity. I don't watch Jimmy Kimmel. I'm not a big fan. I didn't find the monologue funny. I could see it being a little distasteful depending on who you are and how you view it. But I also didn't think he overstepped in terms of what a comedian might do. I mean, Saturday Night Live has always made fun of presidents. There's all sorts of people who did. I get how it can be seen as distasteful, but I also thought if the like nobody really knows. So all the comments in the comment section of it was this or it was that, nobody knows who did what unless you're involved in it. But if the administration pressured to have him fired, I think that was an overreach and an overstretch. I am a firm believer of freedom of speech. There are so many countries that don't allow for freedom of speech. I don't think we always realize how lucky we are, which is also why I think the killing of Charlie Kirk was so terrible, which is he was the first to be totally respectful. He didn't mind if you disagreed with him, even if it was totally, in his mind, a radical, opposite, opposing opinion. And if you came at him respectfully, he would discuss it respectfully. And he had a really good way of arguing his points, which I didn't always agree with. But he would have been the first to defend somebody who had the opposite view and believed things that he didn't believe, to defend their right to say the things that they said. So seeing somebody getting upset and shooting somebody, like, to me, that's just terrible. Anyway, I didn't want to talk about politics. It was really, do I just leave my set it and forget it account? And like I said in the beginning, the main answer is yes. I just leave it alone. Especially because over time, what I've learned is even if I think a stock is overvalued, I could be wrong. And the companies I own in my set it and forget it account are companies I just want to own. I want to be invested in Amazon. I don't want to be too sensitive to, I think it's overpriced, do I not? The only one I kind of kick myself on is Costco, because to be fair, I do want to be invested in Costco. And I think they're just overvalued, so it's very hard for me to buy it. And I think they're a great company. I should push past that and recognize, even if I overpay, maybe I should just buy a small amount to leave it there and set it and forget it, which is the concept of that account. I really try to have in mind that I should ignore valuations and just buy the companies I buy. Now, I'm still me. I can't help it. And I can't ignore valuations, and I pay attention. And for example, like Boeing when they were out of favor and United Health more recently, that is valuation based. Same with Target. They're not necessarily companies I really wanted to own as set it and forget it. But back to knowing yourself and why it's so important that you do your own research, I know myself well enough that if I buy those in the accounts that I have access to, I might get overexcited when they move up a little bit, and that wasn't the goal of when I purchased it. The goal was to stick with it. Boeing in particular went against me a good bit. I might have gotten scared and gotten out of it. The way that account's set up, where I actually have to call the person and put a trade in, I leave it alone more. Even the thought, like, whether it's sometimes out of laziness or it's simply out of embarrassment because the person who runs the account knows that my goal is to set it and forget it, that I don't want to sell things when they go against me, so I just let it be. And what I've learned over the years is if I just let it be and give it the time to marinate, yeah, something might go against me for even a couple of years. But if I wait 5 years or 10 years, it could reverse and do well. The only stock in there right now that I really second guess or think about, well, I probably all of them, but I own a small position in Lululemon. I think the news has been negative enough that it could weigh on them for a long time. And I try to make it a point that I don't really invest in women's apparel. I think it's such a tough category and so competitive, and their trends are always changing. I don't really have an issue with men's because we tend to get the same stuff forever. Like, I think Nike, when it fell, was a great opportunity. The only reason I got out is I saw what was going on with United Health and saw that as a better opportunity. But for the most part, I try not to trade that account. And that's why I keep things separate and have money in my possession that I can make changes to when I think things are overvalued. I would hate to sell Amazon or Google here thinking, oh, maybe it's a little overvalued and maybe I get an opportunity to buy it 20% lower, and it just keep chugging along. When I bought those companies years ago, I assumed this was after split. I assumed one day they would be over $1,000 a share. Now, one day might be 20 years from now, or 10 years is my hope, that I bought a stock back in 2022 for under $100 a share. And if I get so lucky to 10x my money within 10 to 15 years, that's incredible return. No guarantee, again, not financial advice, but I think they are great companies, and I bought them when they were out of favor as well. Right now, maybe a little bit of rotation from some of the things that are in favor to things that are out of favor, but to be fair, I don't see a whole lot that I'm super attracted to, so I'm not making any changes. And if I'm wrong and we don't have a parabolic move, and the economy stagnates and the markets don't go up a whole lot, that's still okay because I have the money that I try to run my life on. And that really is a separate account that is meant to be set it and forget it. So that's a whole long answer as to why my set it and forget it is really a set it and forget it. I think most of you have heard my story about buying the 4 or 5 stocks back in 1988 and being able to watch that over the past 30 some odd years, so that I recognize if you just relax and leave things alone, even if you pick a bunch of bad companies mixed in with 1 or 2 good ones, you tend to do just fine and things can work out really well, even if only a few of the stocks do incredibly well. And again, most of my portfolio is super big and boring because it's more about capital preservation than trying to make the account grow. What I like is it still tends to grow, and maybe I underperform the S&P at this point, but it's more important to me to feel like the money is protected and I shouldn't have a big collapse. Although April was very scary because it moved a lot further than I would have expected, as much as I say what I say. So either way, for me, that's worked out really well to have the separate accounts. It's also working out really well having a trading account because it keeps my brain active. I mean, I watch the markets every day. If I can narrow things down to a much smaller account that I'm consistently watching so that I don't worry so much about the other stuff, it allows me to have something to focus on that I still enjoy trading. It's not because the account is doing well, it's really because that allows me to focus on those things. Right now, primarily hymns and SoFi. But since I can focus on them, it allows me to just pay attention to that trading account. And I love what's been going on with the options trading. That's helping me to be more patient too. I don't believe the people who talk about, making zillions other than if they're taking on big risk and pressing the limits. And I notice their age. And to be fair, that's what I did when I was a kid. I was too stupid to know the risk that I was taking, but it benefited me. I look back now and it's like, oh, I could never do those things today because I just wouldn't take those kinds of risks. Now, the risks paid off, but it's part of why I always give my disclosure, because if I could talk to the kid that was doing the things I was doing, I would be advising me not to take on the risk I was. Like, for the most part, when I was on the floor, if I so the yen was in a downtrend for most of the time I was on the exchange. So I would go in and I would tend to sell it. And if it went higher, I would sell more. And if it went higher, I would sell more. This is a terrible way to trade. And on top of it, you add to it that it's futures, so you're highly leveraged. And I would just keep doing it. And for the most part, it worked out great. And every day I would go home and I just thought, God, this works out so easily. I had no comprehension until a day that the US government came in and intervened because it just gone too far, and the market went up 400 points, where it was like, whoa, this can move really far against you. So I just wouldn't take the types of risks I did back then. So part of why I make fun of the other YouTubers is maybe they're just young and dumb and don't understand the risks they're taking because they haven't been watching the markets for 40 years to see that they can really have moves that you don't expect. It's very difficult to have a consistent, this just works and I have a system type of thing. And maybe they're great traders. That is not a strategy. And I don't think sometimes they give themselves enough credit. And I'm not being a wise ass there. Like, some of them might be very good at what they do. One in particular who trades the yield max funds, he doesn't just buy them and set it and forget it. He talks about knowing the right time to buy it, knowing the right time to sell it, and so on and so on. Well, most people on YouTube are looking for a solution of what to invest in that they can relax and not sit there trading all day. At least that's what I hope. I mean, I figure most people have a job and a life and things to do, and they're not looking to trade all day and pay attention and buy it here and sell it there and do the research of when the distributions are and how they're working and what. I, I just think that's an unrealistic thing to tell people is a strategy. So if you've watched this far, thank you. Say something in the comments. But this weekend, I'm going to go over the trades of Soundhound with my son. I'll probably post about it on Monday when he and I decide what he wants to do and what puts he wants to sell for next week, and potentially, depending on where it closes today, another call. Again, it's exciting for me to hopefully get him to be curious about the markets and start paying attention for the same reasons I think I hope a lot of you do. It's not that I hope he becomes a trader. I really don't. I hope he becomes a lawyer, since that's what he wants to become. But I also hope that he has some basic fundamentals about understanding money management, so that when he's making a living and he has money to put away and save, that he learns A, how important that is, and B, that he has enough knowledge to not be taken advantage of. I hope that's what happens with you guys. I also hope that I encourage people similarly to put away and save. I really, I, to overshare, I watched my sister, who was not good at that, go through some really rough times with money because she just doesn't save real well. And I hope to help people. That's really why I do this channel. I mean, you guys see, like, I'm not doing it. I know I picked up a bunch of subscribers, but I don't get a ton of views, which is cool by me, because as much as I say thank you, and you guys might think I'm joking, the videos really help me to stick with my trades, and it's really helped me as well. So anyway, Any comments, any hello, do me a favor if you haven't already and hit that subscribe button, smash the like button. Tell me what's going on in your lives. Do you have any trades on? Did you do anything this week? Or are you just a set it and forget it type of investor as well? Have a great day.